Eurozone leaders met over the weekend but came up with no new plans for dealing with the financial crisis, causing the euro to lose 1% in value. Fear has driven investors back to gold and U.S. Treasuries. Stocks are giving back the gains earned over the last 5 trading sessions as futures are down over 1%. I'm Deborah Borchardt, and the Morning Call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Deborah Borchardt, and we're bringing you the Morning Call. Scott, we woke up this morning and things just seem to be continuing to be negative. You know, we've got more euro crisis coming out, euro down, our stocks are falling into order, and it just seems like we've got all kinds of negativity, which comes on the heels of that 5-day uptrend we had.
Well, last week we had that reversal. We had it earlier in the week. The market tried to break below 1140. It couldn't. That helped ignite the rally. Plus, I guess it was a little bit calmer. People thought, Geithner saying there's no way that they're going to have a Lehman type event. Then you had Sarkozy and Merkel say they're going to back, Greece not to leave. And then over the weekend you had some cross currents. But either way, the market had a 5-day move. You had a healthy action in a lot of our key stocks. Traders wanted a pause anyway because no one likes to come in and buy stocks on a 6-day, a 7-day. It just makes it very hard and very stressful for traders. And even some traders trying to be cute to short the upper end of the range, they got pushed to their limits last week.
Right. You can't really chase that kind of market. And like you said, a lot of people started going short, but that market kept going up. So now we've come down, and the question's going to be, is this a dip you can buy, or you got to, stand back and wait?
Well, let's take a quick look at the chart. I'm going to go over some levels to see if we hold where we could hold higher. So let's take a look over here at the SPX. So right now in this lower wedge, we had that reversal last Monday. If you look at the chart did that anywhere around the 1140 area. From there, we bounced up to the 1216. Okay, so now what you're looking for is you want to see if we could hold higher, if we could hold 1190. The line in the sand will be around 1172 to 1175. That would be the mid end of the range. So let's take a look one more time at the chart, and I'll show you where it is there. So if you look here, you will see that the charts aren't coming up, so I'll just come back right to my pretty face with them. Anyway, we have to see if this is buyable, and the way you see it's buyable is if you watch the best acting stocks, the best sectors that have all acted well to see if they follow the retracement rules.
All right, well, let's go through some of these sectors. Let's talk about the power share, the triple Qs. We've seen some strength in tech here. There's been some names that have kept this index going.
Well, the Qs held higher. The Qs were the group that pushed through that old support that should have been resistance that gave us, areas to buy. Plus, you had high beta leading the way, some making new highs, and then you had mega cap tech joining the party last week. So if we look at these Qs, if we're lucky enough to look at them, you will see how they came through that support, which should have been resistance, which I guess our charts aren't working, so we're not going to go to them. So take my word for it, the Qs and tech are the place to be. It's the area to look that when you have a sea of red, like we have today, that's the group that you want to see if anything can go green to mute some of those losses. But I think we could get a day or two of weakness in ahead of the Fed, so I wouldn't be just jumping in today on the first down day since we just had 5 up days.
What about the transports? Because a lot of people follow the transports. A lot of people feel that the transports really lead the market.
Well, the transports have not been leading the markets. They just weren't a headwind again. They made new lows before the SPX, before the Qs, before the indices. They held the bottom of the range. I would say if you're in a tier 1 long in the transports, do not add. They're not providing leadership, but we need to see if that could change. Right now, as long as they hold that area, it's fine for now.
And the industrials, where are we at with them?
Same scenario. Okay. I looked at the chart, which I can't show you right now. They are in the middle of that lower pivot, testing the upper end. Just make sure that they could hold higher. Okay, some of these had a catch-up move last week. I don't like to play catch-up moves, but when you get, day 4 and 5 of a rally, the lower tier groups tend to broaden out and you get more participation. That's what we saw with the transports. That's what we saw with the industrials. So as long as they stay in these lower ranges and absorb these headlines, just stay in tier 1.
Okay, we got to cover the financials because so many traders feel that you have to really have a rally in the financials to get this real rally going. And we seem like we may have bottomed on the financials, but I've heard we bottomed on the financials so many times. I don't know if I believe this bottom. So
I agree with you. You know, every time we've tried to talk about buying the financials for more than a 1 to 3 day trade, you wind up losing on your trailing shares. Like last week, you saw a quick little trade, you know, in JP Morgan, in Bank of America, in Goldman Sachs at that lower area. XLF held 12 again, but now, you know, on Friday they gapped up, went lower, a little reversal pattern, and now they look like, you know, they're in no man's land. So watch the XLF. As long as they stay above 12, you know, it won't be, you know, a headwind, but it would be nice to get some wind in our backs, and we'll see that if they start to break higher, but that hasn't happened yet.
all right, so we're going to keep that on the back burner because you may want to get overweight in those financials, but hold off, wait a bit. Let's look at the energy. What about the oil sector?
I looked at the OAHs before coming in here. The OAHs, the XLI, and the transports all look the same. They all kind of look like the, you know, the S&P, where they're in this lower range. They just came off the lows. They're testing the upper area, but they haven't really broken out. They haven't tested that, you know, the old resistance or support with the neckline from that Head and Shoulders top. So for those are kind of lagging or in line with the indices. They're not showing relative strength. I like to play the relative strength. I like to play the fastest moving stocks. So we'll get back to those when we come back after this commercial break.
Right, Scott, as you said, we've been talking about all these sectors and ETFs and bottoms, but there are stocks that have done well, and after the commercial, we'll talk about them.
When the closing bell rings, it's not quite time to run off to happy hour.
Good afternoon, Scott Redler, T3 Live. Welcome to today's recap.
Before unwinding, take stock of the trading day. What's the complexion of the market? Which trade from the morning call triggered? What sectors are in play? And where will the opportunities be tomorrow? Scott Redler covers it all in the T3 Live Daily Recap video. The T3 Live Daily Recap airs every day after the close.
As far as these markets are concerned, you know, we got to take off those glasses